everyone. This is Rob Roy, and welcome to the Daily Wave Options U.S. Market Update. As you can tell from the background, I'm not in the Dragon Capsule, completing some travel here in New Orleans. Family rite of passage here to attend Mardi Gras each year. Looking forward to that this weekend. So no Chuck Norris hat, and we got the beads. Looking at the chart on the screen, as we do each and every week, we show you the stocks that will be featured in this recording. As a quick reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. All right, let's take a look at the market. A lot going on. As you can see, we are moving to the downside here on the S&P. A couple things to note here. It does at this point appear that the wave 5 is complete. Earlier in the week, off this bounce, we did have the potential of an upward zigzag to go up further into the tap box. We kind of got right to the bottom end of it there on the wave 5 high, but now it seems pretty clear that we are destined to head to the previous floor, just following typical Elliott wave rules. Actually can show you an intraday chart here, and as a quick reminder, if you haven't gotten a copy of this software, go to it, go to hub.com. You get free Elliott wave, and you get free live Elliott wave, so you can see exactly what's going on. There's not a current Elliott wave pattern there, but it says we need more data, so you can just clear out the chart. I have it set at 377 data points, and then if once you give it enough data, the algorithm kicks in and shows you that currently right now at this moment of the recording, and we are live during the trading day, so this is not the close. Prices could change slightly moving into the close, but we are in the afternoon on Friday. We're in a wave 3. We'll see where things close at the end of the day. Also talking about the software, the Elliott wave is free. The intraday Elliott wave is free. So no matter what kind of time frame you like to trade, in this day and age, people like to trade short term. You get all this for free, but there is an opportunity to get the AI signals. And I wanted to make you aware of a special offer that the Hub organization has going on right now. It's called the AI Trader Pro. You can get a 6-month subscription at a heavily discounted price. You can look on your screen, see the link there. The link will be provided for you underneath this recording as well. So you can click on the link. It'll give you all the details of the offer. And by the way, when they make these offers, you're grandfathered in. So if you wanted to give it a 6-month kick and see how these AI signals work, which have been pretty amazing. If you watch Trade Finder, you know how well they've been doing. We'll get to that in a moment. But click on the link and take a look at it. See if it might be something that you're interested in. All right, so back to the chart of the S&P. When we look at it here, you can see that we are trading at the low of the day currently. You saw that on the live chart. So we'll see where things actually close. But we are a little bit oversold here from the 10-day moving average. Now, I talk about no security in any time frame trades too far from the 10-day moving average for too long. One side note to that is when we move lower, sometimes things can stay oversold a touch longer than they stay overbought. So my point is we could actually continue down to the wave 4 before we get the bounce back towards the 10-day moving average, or perhaps at the beginning of next week, we bounce back up towards it and then move down. But we do seem destined to test that wave 4 low there in the 575 area on the S&P. As bad as that sounds, going back to the weekly chart of the S&P, really not that detrimental from a technical standpoint. You can see just a little bit of a blip down. We haven't even broken support on where we were trading back in October, fall of last year. So it feels pretty ugly with where we've been this week in the markets, but significantly from a technical standpoint, not so bad. We did have some economic data this week. Obviously, the NVDA earnings, we'll talk about that a little bit later on when we get to the stocks of interest. But we also had the highly watched PCE report, which comes out, the Fed's favorite inflationary indicator, which came in line with expectations, but still, I'm going to use stubborn. I'm tired of using the media's word of sticky. Still a little stubborn on the inflation side of things. Something to note, though, that was inside there is although personal income ticked up, spending went down, and that's not a good thing either. It's good that we're making more, but the fact that the consumer's not spending, we are a consumer spending-driven economy. So if the consumer's not spending, that could be a little bit negative for the next quarterly reports that come out. We'll have to see how that continues to play out, but something of note there to look at. The PCE report, I talk about the Fed a lot. The Fed loves it because it takes housing. It's not as big of a component of that. And I just find that interesting. I always made fun of the core CPI that the Fed liked to look at, which takes out food and energy because we don't pay for energy in our cars or in our homes, or we don't eat. So it was always ridiculous that core CPI even exists. Kind of the same thing on the PCE report. Not like any of us have to pay high prices for our homes or rent. It's just nuts. I could do a whole dissertation on that. But the Fed looks at it, so we pay attention to that. We do still have the Fed fund futures pricing in more than one rate cut now. I don't see how that occurs. The Fed fund futures has a 50-50 chance on October. With today's data, they started to price in a little bit of September. I still think one rate cut in December is optimistic. Why would the Fed cut rates? The economy is weakening, yes, so they would want to create stimulus for the economy, but inflation has plateaued, if not ticked back to the upside. Why would they want to cut rates? Just my speculation. All right, so what we look for here on the market is, again, do we go to the previous four first, then bounce, or do we bounce a little bit first before coming back down to the previous four? Looking at the VIX, we've had a little bit of a spike up in the VIX, so moving a little higher here, increased volatility. The question becomes, and it seems to be at this point, is what was resistance at 17.5 on this trading range that I'd drawn, is that now support? You can see we're at the 10-day moving average is up there now. So now is this upper line, which is encompass some of these big spikes that we had. They're short-lived, but they occur. Maybe we're destined to test that level up above 22.5 on the VIX. I do want to show the bond market. So let's go to TLT. I find this really interesting. You can see this big breakout, not unexpected, and we've commented on how well the Elliott wave pattern, just as perfect as it can possibly be. As a side note, if you're not a big Elliott wave fan or familiar with it, the more liquid a security is, the better Elliott wave works, because that's really what it's analyzing, is the activity and psychology of the masses. So the more liquid, the better. Works really well in the bond market, currencies, and then also the more liquid stocks as well. So we had this perfect five-wave to the downside pattern. You're going to get a corrective pattern after that. We did. We went into a triangle, flat zigzag or triangle is one of the three that's going to occur. So we clearly had the upside breakout out of this symmetrical triangle, which means on the TLT, prices are moving up, and therefore yields are moving down. Normally, you would think yields moving down, that's good for equities market. So why is the equities market going down if yields are going down? It's because of why yields are going down. Money is leaving the equities market. There's some rotation moving into the bond market as there are concerns about where we may go, at least in the short term, on the equities market. So money goes there to hide in the bond market. I know a lot of you like the TNX. I was using TLT as a midpoint, but we'll go ahead and take a look at TNX as well. Now, remember, TNX is now showing yields and rates, where TLT shows prices. So this is the opposite side of things. Same thing. We had the symmetrical triangle. We broke down. We are trading right around this 100% extension in the zigzag. So we had a complex B wave here in this zigzag pattern. All kinds of Elliott wave stuff all over the bond market right now. So there was the A wave down. We have the B wave bounce up. We go through this corrective move, and then the breakdown. Actually, that would be a corrective move in the C wave, just to get that correct. On the complex C wave that's broken down to 100%. So can the bond market stabilize here? Maybe that could give us a little bit of a bid in the equities market, or are we destined to continue with this breakout to the upside in prices and down in yields? I don't know that that changes too much, but perhaps there's a little bit of a pause in what the bond market is showing us. Looking at some of the more other markets here, in the U.S. domestic markets, we'll look at the Dow. These charts are going to look similar, even though they're slightly different in the Elliott, but the direction is about the same. The only difference here on the DIA is where the S&P last week on Wednesday did, at least for one day, close above resistance at 610, but no follow through. Another one of our rules: you got to have a follow through a confirmation day. If you wonder why that is, and I talk about how the market gives head fakes, the head fakes are designed to shake out the weak hands. So if you don't get a follow through or confirmation, some people may jump in and say, "Oh, we broke above a new high on the S&P, so we got to get in." And then look what's happened since then. No follow through to the downside. The professional traders will take advantage of the short-term mindedness of the retail trader, any opportunity that they get. So on the Dow, we weren't able to close above 450, but we certainly tested that level, and perhaps we're coming down into the lower end of the range. I talked about flat zigzags or triangles being the corrective patterns. Looks like a pretty nice setup for a flat here as the corrective pattern following the 5-wave completion on the Dow. So we went down, that would be A, B, and we should move down towards that 420 level to complete the wave C. Interesting things about flats, it could stop just a little short or just to go a little long, but it's going to be somewhere in the area there. Oftentimes it hits the exact price that the A wave did, but it doesn't have to. We have a lot of education on our website at ewotrader.com, and we talk about the different ways that flats can be constructed, but that's what's going on the DIA. Then we move to the Qs, and this is another indication of what's going on in the markets in general as far as rotation into the bond market. You can see that the Q's moving down. You would think that rates coming down would have been a good catalyst for the tech stocks. Tech sector hasn't been that way, so another clear indication that we are situated to not have money staying in the equities market, but move to the bond market. Now, the one positive here on the Qs is that we have labeled a wave 4. We're right at the 38.2% level. Just as we talked about on the S&P, we're a little oversold here. So right here around this wave 4, perhaps at this point in time, we do get a little bit of a bounce back to the upside. This would be a logical area, not just from the wave 4 and the fib level, but the corridor of potential support in this area going back to last fall, somewhere in this 480 to 500 level. So maybe we get some sort of a little bit of a bounce from slightly oversold condition and the LA wave pattern here on the wave 4. But remember, this wave 4 could go down to 50 or 61.8%. It doesn't necessarily mean that this will be the end of it. So any bounce still has to be looked at from a suspect standpoint until we close above 510 on the Qs. Looking at the IWM, the IWM is on its own, and we gave this out. If you've been watching Trade Finder, and I want to invite you to join if you haven't, you can look at the link for Trade Finder on your screen. We do it every week on Tuesdays at 1 p.m. Eastern Time. It's during market hours. We look at the markets, we look for trade ideas, and we have a live Q&A. And we've had a home run month on the trade ideas from Trade Finder. So far, every single one of the ideas that we've come out in Trade Finder has been a nice winner. So just a stellar month on those ideas. This past Tuesday, we gave out the IWM moving to the downside. So if you haven't joined Trade Finder, click on the link, join us. Again, it's free. Love to have you join us on Tuesday. Great community, lots of good questions, and you guys can chat back and forth. And that's the whole idea, is the community aspect of it. So we'll see if we can complete February with a perfect month on the trade ideas. And so we're looking for the IWM to go lower, and you can see we're already there. So we've already moved lower than where we were on Tuesday. This wave 5 is now in the tap box. I do think that we're destined to move down to 205 here. That was the support level when we had the trading range between 205 and 225. We're not quite as oversold on the IWM as some of the other markets. So perhaps we move down, and notice that the 205 is in the exact middle of the tap box, which stands for time and price projection on this hub Elliott wave software. So whether or not we bounce at the beginning of the week or not, I do think we're destined to see 205 on the IWM. So pretty interesting things there. Let's go ahead and move into energy. We'll look at the UNG. We had this nice move to the upside here. I've been talking about natural gas and the interesting fact that we have had a bounce as we're moving towards the end of winter with the market looking ahead. Why would we get this bounce now? Well, a lot of the data centers that are being built, Tesla built that one in record time, are going to be powered by natural gas. So that's put a little bit of a bid underneath it. So we had this big wave 5. Now the question is, can we hold this previous wave 3 high on natural gas? We are breaking below the 10-day moving average today, but we still can hold this trend line right at the top of the wave 3 if we're going to get a further bounce to the upside in natural gas. But all we're doing at this point in time is going through a little bit of a corrective phase from a pretty vertical move, gaps up, separation from the 10-day moving average. All the rules that I talk about are all being corrected at this point in time. So if we break below 20 on natural gas, then we have to look at the Elliott wave pattern of a wave 5 being complete at 91%, which it may be, and a movement back down to the previous wave 4. So can we extend this wave 5? We're going to have to bounce pretty soon. If not, we're going to see a test of that move down to the previous wave 4. Looking at oil, the USO is just performing exactly as I've been talked about in this big trading range. On USO, we got a little bit, I've already given a plenty of dissertation on the fact we got a little bit higher on USO than I thought we would. I thought we'd be in this trading range, but we're back in that trading range. We're coming back to test the point of the triangle. That's what happens when you have a triangle breakout. You're going to come back and test it. You don't know exactly when. Just like with gaps, they're going to get filled, but you don't know exactly when the gap's going to get filled. So we're back in that area of testing the point of the breakout. I still think we stay in this big trading range in oil, whether we bounce up or move down to the lower end. I've gone through the dynamics, so I'm not going to repeat them here. Go back and look at the past recordings if you want a further dissertation on my viewpoint, for whatever that's worth, on oil staying in a trading range. Moving to the metals, gold GLD had a big move to the upside, and now we're correcting it. So we had a really nice strong wave 3. It's interesting that gold and silver have different Elliott wave patterns, but are forecasted at the current point to move in a similar fashion, which is down. So you can see this movement to the downside here in GLD. So we're creating the wave 4. We'll just have to wait and see where that wave 4 ends and starts back up in the wave 5 potentially. But for now, you just kind of watch gold. Very difficult to figure out where that wave 4 may show up. So as I mentioned in silver, SLV, we actually have a 5-wave to the downside pattern. So where we're in a 5-wave to the upside pattern on GLD, but a 5-wave to the downside pattern on SLV, you might be thinking, well, how can gold and silver have completely different Elliott wave patterns? Well, they can. They'll eventually get back in concert together, but for now, they're both showing potential for lower moves. So continuing down in GLD to create the wave 4, and on SLV, continuing to move down into the wave 5. We'll see how silver handles when we get down to 27. It'll be the same thing. We had this descending triangle that broke to the upside. You've heard me say a million times, a descending triangle does not mean a downside breakout. Any triangle can break either direction, and once they've broken out, you come back to the point of the breakout. So it does seem like SLV wants to at least come down to 27, test the point of the breakout. That'll be right at the top of the tap box. Do we move lower from there or not? We'll just have to wait and see. But 27 will act as support on SLV once we get there. But you can see that we're a little bit down from the 10-day moving average, but not significantly oversold whatsoever on SLV. So that gives energy and the metals. We had to move into crypto world, which, been a rough time for Bitcoin. It all started with the news that there was hacking and some Bitcoin was stolen. And that kind of broke us out of this real tight trading range between 95,000 and 100,000. And we've just continued down from there. We are at this point in time trading at the high end. I know it trades 24/7, but it also has a rollover date so that when you have end of day programs like what we're showing here, you get an end of day print. But right now, the live quote is Bitcoin has bounced a little bit. You can see the wave 4 came down to 50%. Is that going to be it? Are we going to hold there? We have some decent numbers out of Mara, some other crypto-minded things, but a pretty significant break to the downside out of this tight trading range. I was looking to see if we could hold this 87.5 level. We didn't, and we came down. Now, the problem when you're looking at Bitcoin, if we condense the chart in a bit, is this move that occurred post-election night was really vertical from the 70,000 area. And it does seem that we're destined to come down and test that level, but we're awfully close to it. You could draw a line, and sometimes these lines are very clear as to where support and resistance is. Sometimes you could have a little bit of leeway here. Is that little consolidation there that we're close to on the low of the day today enough, or do we need to come all the way down to this area of 70,000? But we're in an area now where a little oversold from the 10-day moving average, where maybe we get a little bit of a bounce out of Bitcoin. This has been a pretty vertical breakout to the downside. And so we'll see at what point it bounces. Do we bounce from here? Do we need to hit 70,000 first? But we're in an area where maybe some of the pain in Bitcoin wanes just a bit. Looking at Ethereum, hasn't wanted to participate in the upward movement of Bitcoin, but it sure is participating in the downward movement here and breaking below this really important level at 2250 on Ethereum. We got below it, and gosh, you've heard the phrase before. Some of you like to use it in the comments. This is a Katie bar the door event if we can't hold here, because when we go back and look at the chart of Ethereum, you can see for how long this area, we got to go back into 2023 before we've been below this level. So we need to stay above 2250 on Ethereum. So a bounce and close above there would be important. Otherwise, we're probably headed lower on Ethereum. I know the whole world has been looking at XRP. It has broken to the downside, but not as significantly as Bitcoin and Ethereum. So you haven't felt quite the pain there in cryptos. If XRP is where you've been focused on, we did come down and test the point of this descending triangle breakout back from the end of the year and the beginning of this year. So that rule has been followed. Is that enough? This move here from $1.50, though, again, was vertical. So this is going to be a short-term bounce. I think there's a possibility that we need to see $1.50 again. We did have a brief move there in early February, but maybe we need to come down and test that level again on XRP. I know everybody doesn't want to hear that because, as I said, it seems like the whole world is focused on that crypto for now. Solana also breaking down, but same thing. Also at a point here of the line in the sand, another long-term support level. When we move the chart over on Solana, we need to hold right in here, or it could be another Katie bar the door. So kind of nail-biting time in the crypto space right now. But these are pretty vertical moves down, so we might get at least some relief. If not, we're destined for more pain in crypto. So be careful on a short-term bounce, though, that it may only be short-term, and whether or not we continue following that down or not. So moving to stocks of interest, we'll move into Apple. And by the way, we are following the same thing we did last year here, where we're giving away one of our free Evo Trader Level 3 subscriptions, which includes our time strategy portfolio, which is stocks that are expected to stay in a sideways range after a big drop. So we'll put on a calendar spread or a butterfly, something to catch that extra IV rush that occurs when a stock drops and then stays in a trading range. Our volatility strategy, which I think is going to be really active in the next couple of weeks. The market hasn't really gone anywhere over the last 4 or 5 months. Lots of consolidation patterns. Those are our triangle breakouts. And then the AI impulse that I talked about with that offer that you can get to get the AI signals, that Trader Pro package that's available by clicking the link underneath this recording. To register for this giveaway, which is worth thousands of dollars, if you go to the website, all you have to do is leave a comment underneath this recording and you're automatically registered for the drawing. So one of those each month throughout this year. So Apple had bucked the trend for a while. I've always talked about how I really struggle to short Apple because they have so much cash. At any point in time, they can construct a stock buyback. They came down to support here on Apple in the 220 area, and then we had a pretty nice bounce even when other tech stocks were selling off. And you have to wonder, was that some buying from Apple, accumulating shares? But we are starting to move back down. We've broken the 50-day moving average today. Wanted to see that hold if you're long Apple. So maybe we're coming back down to 230. There is a corridor here between 220 and 230. But on the negative side of things, so that's the positive, is that we're nearing an area where it could have support. But on that bounce, we created this lower high. So that's a little concerning on Apple. And then SMCI, they were able to file their 10K report on time, so they aren't in danger of delisting anymore. That gave a really nice bid into SMCI, but as you can see, was short-lived. Another one of those rules. What goes vertically up oftentimes comes vertically back down, and that's what happened with SMCI. So perhaps some short covering there in the fact that they did come through. If they hadn't, then gosh, there would have been more to the downside. Maybe people were betting on that, but we're now back down. Let's see if we can hold this 50-day moving average. Maybe that's enough of a correction. We're back below the 10-day moving average. So vertical move, too far from the 10-day moving average. We came back down. We corrected that part of the stuff. Can we hold the 50-day moving average? That's what we'll take a look at on SMCI. Let's take a look at Tesla. I mean, the whole world seems to be talking about this, and people upset with Elon, with his involvement with the administration, et cetera. You've read about liberals in California that are not renewing their Tesla leases because they're upset about it. But the numbers have shown that people that have moved into the EV world are staying true to it. They're not moving back to gas-powered vehicles. They're staying there. So this is just a little shot at Elon's involvement with the current administration. But we talked about how it seemed like we're going to come back down to 250. We had this triangle here. We had this really big run following the election. And then we formed this triangle. In this case, the descending triangle did break to the downside. We also have a nice zigzag there. And by the way, the extension on the zigzag happens to coincide with the support level around 250. So we're getting in that area. We're at 286 right now on Tesla. We might need to touch 250 first. But at that point in time, you could have a pretty aggressive long position. If you have speculative money, that might be an opportunity if you wanted to go back long. Look where we just were at the end of the year, up at 480. Now we're down at 280. So you could view that this could be a great opportunity on Tesla with this break to the downside. We'll see. NVIDIA was the big one in the news this week, as you know. And the earnings report was pretty solid, and their guidance was right in line with expectations. There were whispers out there that perhaps there could be a big disappointment in NVIDIA's earnings. They didn't disappoint. They had a good, solid earnings report and guidance in line, which has been pretty positive in this quarter of reports where a lot of companies have guided lower. They didn't do that with NVIDIA, but yet we're still moving back to the downside here. Are we testing this wave 4? It looks like it. Can we hold that? If we don't, then this pattern could be disqualified. But you look at NVIDIA, and there's the 10-day moving average. So we're getting a little bit oversold here. We're in the area of the wave 4. Again, if you have speculative money, perhaps there could be a short-term bounce here in NVIDIA as well. But certainly disappointing that it didn't react a little bit better with a decent earnings report and decent guidance. You could argue good guidance considering what other companies has done, as I mentioned. So if there's some opportunities here, maybe, and I just want to highlight this, these would be short-term bounces. I'm not talking about everything's okay and we're going longer term. We're just in areas of being oversold and potential support where you could get short-term bounces. Those are 1 to 3 day bounces, in my opinion, when you look at those things. So that's NVIDIA. And we'll also take a look at Palantir. I know the whole world wants to look at PLTR. So let's add that one into the mix here. And, the CEO came out and, you just wonder, CEO of NVIDIA did that yesterday as well. They make these comments that trash their stocks, and you wonder why. But we're also in that same boat here on Palantir. I know everybody likes this one. You all ask about it in your comments. But there we go. Gap up, vertical move, all the rules in play here on Palantir. Too far from the 10-day moving average. None of those are good for sustained moves. What goes vertically up oftentimes comes vertically back down. We did that. Now we're oversold from the 10-day moving average, and we filled this gap that started back on this move. So we're in an area here with a wave 4 around 44%. So we're in that 38.2 fib level to 50%. Maybe we get an oversold bounce in Palantir. So perhaps at the beginning of next week, we might see a little bit of a bullish move in some of these. So there's some opportunities on, again, very short-term moves that could occur here on some of these highly watched issues that y'all like to ask about. I do want to show the dollar. The dollar has found a little bit of a bid after a sell-off. You would have thought that the dollar moving down would be good from the fact that I've talked about how the exchange rate affects quarterly earnings from international commerce companies, goes right to the bottom line, right to margins. So a little bit of a break in the dollar would be helpful there. But now we've got a little bit of a bid back in the dollar. And that's probably same thing as money moving into the bond market, looking for a place to hide. You can argue about all the debt the U.S. has, et cetera, but the U.S. dollar is still the last point of resort there. So maybe there's some rotation hiding in the U.S. dollar, at least short term as well, on this little bit of a bounce. I would like to see the dollar actually continue down. We want it. We want a strong dollar. I'm in favor of that, but not when it gets too strong. So it's kind of that fine line, the Goldilocks thing, just right. So it's real tricky when you're looking at the dollar. I do want to finish things off in this recording on the INDA because there is something to point out here. We did break below that 100% extension. We had talked about that in the last couple of weeks where we came down. That wave 5 relabeled to a wave 3, catching up with all those wave 5s that relabeled to wave 3s on the way up over the past couple of years. You wanted to see that 100% extension hold here on the INDA. It didn't. And the algorithm was correct here. Noted that it never relabeled this wave 3 to purple. So the green means it's still active. In other words, the Elliott wave algorithm that the Hub organization uses, which is exactly how it was programmed based on Ralph Nelson Elliott's mathematical algorithm, showed that this was still active and we could move lower. We needed to see it bounce. It didn't bounce. So we stayed lower here. And now it looks like, even though we are short-term oversold on the INDA, that we're destined to test this 161.8% level. So thanks as always for spending some time with us. Have a great weekend. Look forward to talking again soon. Take care, everybody.
If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.